Hi, everyone, and welcome to a massive Monday market update. Have things progressed in the last 20 minutes? I just finished filming my more advanced Monday market update for our mastermind clients. And in that episode, I was looking at the charts from this morning and seeing how the closes were looking. And I was saying these markets look like they're on the edge of a big moment, almost a circuit breaker type situation. It seems like it's meandering towards the next Federal Reserve interest rate, FOMC. So it's sometime this week, I think it's on the 22nd, 23rd in the United States, where they decide on the newest interest rate rise and what that's going to be. Likely 0.75, could be 1%. We just don't know. But markets look incredibly heavy right now. We've got a lot going on in Russia and Ukraine. This morning that the US will defend Taiwan if China go for it. So there's a lot of macro risk around, and we know this. The dollar's surging higher, US treasuries are getting sold off harder. It's putting, again, a lot of pressure all over these markets, all over risk markets. And I guess don't fight the market when you're seeing this pressure and this heaviness going. Go with that trend. Don't make heavy plays, don't get heavy bets, don't take massive risks, because you just need to try and look around the corner of what's coming and hedge yourself. Look at the probabilities and think, okay, well, is the market going to heavily bounce here based on everything I've just told you? Likely not. What we need to focus on right now is whether Bitcoin heads towards the lows, and it looks like it really will, and whether that support is going to hold. I think that is the biggest question we can focus on right now. Is the low in? And if it is, where are we going to bounce here? Are we just going to confirm? Are we going to go sideways? Is this a bit of a shakeout again to the downside? But are we actually making new lows? Are we just going to, was it now 18,700, give or take? Are we going to actually breach 17,500? That is the key for me. What the S&P 500 futures was telling me before crypto and the crypto market, when we saw all the timeframes close. So on Monday morning around mid-morning in Australia, around about 10:30, we see all those timeframes close. So the candles on the charts, we're looking at a weekly, a daily, 4-hourly candle, it doesn't matter. They all closed at that single point, which was this morning. If you go lower timeframes, it might close slightly different, but the higher timeframes, the more important timeframes, they all closed at that point this morning. And before that, we can look at the S&P 500 futures and just how that was looking. And you can just see here, look at this trend, bang, bang, bang. It's all just declining down with this very clear bear move. And it just looks heavy. It's trying to climb higher, but it's getting beaten down every single time. And that red candle there from the CPI print has just pushed us into an area we don't want to be. And the market's opening clearly in the mood that it wants to come down and test these areas. 200-week moving average, also it's below key volume support. So this to me looks like a continuation, which again spells a bit of trouble, and crypto has reacted to that, is my read. And if we just go on over to Bitcoin just quickly, you can see here the technicals just do not look good. The RSI doesn't look too bad, to be honest. Like overall on the weekly, if we're looking at a mid to longer term picture, we're clearly trying to trend higher. We're above this downtrend. We might come back down, hit it a little bit, but it looks like we're in this phase where we do want to retest these lows and confirm it as support. And if not, we need to figure out where this is going to go to. And then you can look at those 300-week moving average, 400-week moving average, around about that 16,000, 15,000, 14,000. You have your horizontal levels all ready to go in case there is the bottom falling out of all the markets based on what we're seeing in the dollar and the treasuries. Is it going to happen now? I don't know. This does look like a pretty hairy moment in terms of coming back down. This weekly candle doesn't look that flash, so we're just going to have to wait and see. But this is the box we had drawn last week, which it was very clear to me that if we were going to get rejected in these areas, we're going to come back down and test the liquidity in these zones. So this box here, this is a zone of high interest for the market. It's where back in 2017, when we had the high, this is where we should see a lot of volume being traded and exchange hands just based on the volume on the right hand side. Don't want to lose this. So that is key for me. Again, we do want to see a bounce. We also just want to keep track of how big this box is. So I've drawn this from this 17,500 low all the way over about 145 days. So that was the length of the accumulation zone in 2018 in the bear market, before we had the move higher out of this area into a different phase of the market. Again, we didn't have this macro issues that we are having now then. So take it with a grain of salt, but I find it interesting to overlay that to where we were then compared to now. So paying attention to that, because generally these moments in time, it needs either a circuit breaker moment where the market reverses, or it's a slow grind and we could dip down and whatnot. But again, I'm just speculating here, but that's what I'm seeing. But technically, this doesn't look great. This moved down to the low, came higher in a bit of dead cat bounce. And now we've had a retest here, but we had that lower high. You can see that the high couldn't re-breach the 200-week moving average. We're coming back down again. So this is the moment to find out whether we're going to break out to the downside or find that bounce. So very, very interesting times. Ethereum, now, clear buy the rumor, sell the news event, which was speculated on. That was probably a higher probability that was going to happen. So that definitely has happened. The CPI print really ruined the party. Into the merge is going to have that move higher, but with these events, we often see a sell on after, and also you got a lot of people locked in to staking regimes and whatnot that probably want to sell right now, and they're not able to sell, which is interesting. So it's causing a bit of maybe panic, a bit of speculative arbitrage between those two, and that just means they're trying to find ways of making money and trying to sell where they can. So maybe people are offloading some Ethereum they actually do have in software wallets, not staked and whatnot. So that's just speculation. But broadly, now that that event is over, there's no narrative, there's no catalyst pushing it forward. It's going to be interesting to see where Ethereum goes, but it's dropped right into the box, which we had overviewed last week. I don't know if there's masterminds or whether this was the public video, but you can see here it's dropped nicely into this pocket, and I drew that pocket there because there was a big gap of volume here. So I expect this to come down a little bit further, maybe 1200, maybe to 1000, really test out this zone here. Likely not get under 1000, but don't rule anything out. But to me, this is a prime area of interest for Ethereum buyers for the future. So just keep an eye on that. Not saying that this trend can't, reverse, but we've got a clear break of this low here. So this trend's now over, and you probably get rid of that. And now we're going to see if we're, sideways grind, try and start a new trend, look broadly, maybe go to the weekly and see what we can find there. All right, this is, again, what we were seeing, that pressure on the market. I just wanted to just quickly, very, very quickly show you about the dollar. It wants to go higher, but we are seeing this bearish divergence. But as long as the world is hungry for dollars and they're selling off US treasuries, TA doesn't really matter too much on the DXY. You go out to the weekly, you can all look at all that. And we are seeing eventually the momentum will have to give way, which will give a bit of love to risk assets. But again, when you're looking at the macro, you're seeing everyone wants dollars to pay off those higher debts, just keeps borrowing higher. And as I sell off your treasury, it just goes higher and higher again into dollars. It's a self-fulfilling prophecy. This will just roll higher until something breaks in the credit market, where the Fed has to step in to really rescue the credit markets, which is a pretty scary thought. And that's what could cause, that freeze and then potentially the big drop in the market, which is, I know, what a lot of people are expecting. And I'm still quite cautious of that, because when everyone is expecting something, if there's a consensus that, we're going to see this epic crash, maybe it's the bubble I'm in. I follow a lot of macro analysts and experts and whatnot. And a lot of them are thinking this way, but some of them are also saying, well, the conditions are fundamentally different, and how it's structured now, banks are far more well capitalized, the Fed's ready to inject liquidity. We may not see that God drop. We may just see a slow grind lower, multiple years of sideways action. But again, with maybe people that were incredibly bullish all the way at the top, I'm seeing a lot of charts now being posted of the 2008 crash and comparing it exactly with now, and thinking it's going to replay exactly the same. So yeah, you have those real extremes, and I'm just cautious when I see a lot of people posting those sorts of charts, because markets are too smart for that. They generally do another thing. But then again, the macro could be so one-way driven that we're all on the right money, we're all on the right track, and maybe retail outside of Twitter and whatnot is on the other side. I think, okay, we're just going to keep buying the dip, and it's going to eventually reverse, which may not be the best course of action. Broadly, if we're looking here at the 10-year government yield, just keeps screaming high, and this is at a very high level. Not going to go crazy on this, but governments around the world are selling any US treasuries that they own to buy US dollars to pay those higher debts. So we're seeing the scream high. This increases the cost of capital even more, credit cards, all that. And eventually it creates a point where the economy just can't sustain itself. And the US government is one of the largest holders of these debts in the world as well. So every time this goes up, they're paying higher costs. Their tax receipts, their tax returns are becoming less and less, so they can't pay for the economy essentially. So yeah, it's coming to a circuit breaking point. We're just going to have to see how bad it gets between that point. And you can also just continue to be forward looking in these markets. You have to be forward looking, and no one knows what's going to happen. So you can look to the mid to longer term, short term turbulence. We have to wait till what the Fed says Not saying we're going to have a God crash, not saying we're going to go straight up, but I'll probably put my money more on a bit of neutral, grind lower, sideways action, really round out this bottom. We're going to have some scary moments when futures markets are really trying to create a bit of panic to the downside, also a bit of FOMO to the upside. So I think we're just going to have, a pretty tumultuous area. But we've all been aware of this towards the back end of the year. It's coming towards a decision point where either the Fed has to pivot or we really see what happens. So this is just another chart I wanted to quickly bring up to everyone's gold, and it's breaking down from a huge level. It's going through the 200-week moving average. And there's not much below it, so it's got a fair way to go. And gold traditionally has been a fairly good hedge in times of monetary inflation. 2008 had a big drop before it really rocketed higher after the Federal Reserve stepped in. Same with 2020. So parallels here. We're seeing Bitcoin, gold all drop down, potentially before a big moment. So that's what I wanted to get across, that we just have to have the forward thinking hat on. And also try and block out the short-term noise. But again, I have to present you what I am seeing. And in the short term, we just have to see what Bitcoin can do at these lows, as well as the stock market, where it's going to go. So that's my play today. Any questions, please reach out. More than happy to discuss. And I probably shared today a little bit more of the advanced content, but I wanted to give you more of that 360 vision of what we're looking at right now, because it is ultimately incredibly exciting to see markets doing this, because it means volatility. There's tremendous opportunities to the downside, more areas where you can accumulate for the mid to longer term, even shorter term. There's still some charts out there that look really good in crypto, which is pretty crazy. All right, guys. Well, let's leave it there. And if you'd like to discuss any of this with the team, let us know, or reach out to the team if you'd like to become a mastermind client, or even if you're outside of the VIP group, the premium group, maybe you've enjoyed what you've seen here today, make sure to reach out to the team, and we'd love to get the process started with you today. All right, see you guys. Bye.